It's late at night. You're scrolling through social media and seeing people your age living lives that feel ahead of yours. Trips, new cars, nice apartments. Meanwhile, you're doing mental math at the grocery store. It doesn't feel fair. It feels confusing. And eventually, it creates a quiet question most people never say out loud. What am I missing? This video is about that question. Not hype, not shortcuts, but how money actually works in the modern world, and why understanding that changes everything. Most people believe wealth is about income. If I just earn more, everything will be fine. But that's not how it plays out. There are people making six figures who feel constantly stressed, and others earning average incomes who quietly build financial security. The difference isn't talent or luck. It's understanding the difference between earned money and working money. Earned money comes from your time. You show up, you work, you get paid. Working money doesn't care if you're tired, sick, or on vacation. It grows because it's invested in productive assets. Here is the uncomfortable truth. If all of your money depends on your time, your financial ceiling is limited, no matter how hard you work. Most people feel poor not because they're failing, but because inflation is quietly winning. Prices rise, savings accounts barely move. Your money looks safe, but its purchasing power shrinks every year. Doing nothing with money isn't neutral. It's a slow loss. The stock market isn't a casino. It exists so businesses can raise capital to grow. When you buy stocks, you're not guessing numbers. You're buying ownership in companies that sell products, generate profit, innovate, expand. You're participating in economic growth. That's why long-term investors win. Most people fail because they treat investing like entertainment. They chase trends. They panic on red days. They expect quick results. That's speculation. Investing is slower, calmer, and less exciting, and that's exactly why it works. Compounding isn't magical. It's mathematical. Small, consistent investments over long periods create exponential results. The earlier you start, the less effort it takes. Time does the heavy lifting. Crashes will happen. Every investor experiences them. But history shows something important. Every major market crash has eventually recovered and reached new highs. The market rewards patience, not panic. Volatility is the price of admission for growth. A real wealth-building system is boring. Emergency fund first, automatic monthly investing, low-cost diversified index funds, long time horizon, minimal emotion. This isn't flashy, but it works. The biggest enemy isn't the market, it's your own behavior, fear, greed, impatience. Successful investors build systems that protect them from themselves. Automation is discipline made effortless. You don't need to be brilliant. You don't need insider knowledge. You need consistency and time. That's it. The stock market doesn't reward intelligence as much as it rewards patience. Wealth isn't built overnight. It's built quietly. While others chase trends, you stay consistent. While others panic, you stay invested. And years later, the gap becomes visible. Not because you were lucky, but because you understood how money actually works. If you want to keep learning how to build wealth in a realistic, long-term way, subscribe. This channel isn't about shortcuts. It's about systems that work. Stay patient, stay consistent, and let time do the rest.